Meantime, we've got Tim Ord on the line. Everybody's waiting. Hi, Tim. How are you?
Good. Glad to be on again. So
good. That's great to have you, Tim. Before we do anything else, can you just update people and tell them about the Ord Oracle, and just if you can give them a way of contacting you or seeing your work?
All right. Yeah, I'm on Twitter. Just I think it's Ord Oracle. If you want to find me on Twitter, my website's ord-oracle.com. And over the last 4 years, we outperformed the market, the S&Ps. Last year, I think we're up 30 or like 29%. The year before, up around 28%. Markets were up, around 20, 23, somewhere in there. So,
right.
And this year, we're doing pretty well. So, anyhow, that's our performance. So, been in the business a long time. Got in business in 1977. So,
I know that I used to listen to you when I was playing tennis at 3 o'clock in the afternoon. Every once in a while, out in the courts, and I'd have my little radio, and I'd be listening to you and Tom discussing the market. It was fantastic. So, Tim, can you start updating us right now with your work?
Right.
I'm going to put the charts up here so I can see them. I believe Al's already got them organized. Very good. You got the first chart.
Right, the SPY. This is actually a 39-minute SPY, and it shows up the best. You can do it daily, but anyhow, the pink area right here, this window is the 39-minute SPY. The bottom window is a 39-minute VIX. And anyhow, VIX trades the opposite of the SPY. So if the SPY goes up, VIX should go down. And so today we're hitting a new high on the short-term new high on the SPY, and the VIX is making a lower high. It should actually be making a lower low. This divergence has been going on since about July 11th. So it's not a huge divergence, but they start out small. So usually I like to have at least two different indicators that are not related, give kind of the same signal. So anyhow, the VIX should be making a low. It's not. It's making a higher low while the SP is making a higher high. That's a negative divergence. Chart number 2, I showed this last time. This is the bottom window is the daily SPY. Next window higher is the SPX tilt ratio. So it's the equity market against the bond market. That's what
in daily charts, yes.
Yeah, this is a daily chart, and I put an RSI on the SPX tilt ratio, and every time it gets above 70, we're at 79 right now, 77 or 79 and change. But if it gets around 70, if you can look here, this one didn't work. It actually works 80% of the time. This one actually picked out a pretty decent high. That stopped a rally, went down for a couple, 3 weeks, went down immediately there, kind of bearish there. This flipped the market sideways. You had a bearish decline probably a couple of weeks there. Anyhow, it's doing the same thing again. We're up again 79. So you got the VIX, a bearish divergence, and you got the SPX tilt ratio, RSI, at a bearish divergence. So the upside really limited here. And also we're entering into a seasonality period that's actually, we're entering into the weakest quarter of the year. And this quarter lasts until October. So I'm thinking what's going to happen. This is a chart. This is a weekly chart SPY. And so I'm thinking we're making a high right here, right now. Nothing real significant because we broke above the February high back in February on increased volume. Okay, when you break a previous high and increase volume and you close above it, normally that's a breakout to the upside. And if you notice, we pretty much rallied from the April low all the way up until we are right now, and really haven't had a consolidation. April,
correct.
You just went straight up, more or less. And so there's always a B wave. In other words, a B wave is a side wave. You have an A wave, which is an impulse wave, have a B wave consolidation normally, then you have a C wave that goes up even higher. C waves
are usually very strong, right?
Yeah, and I think that's coming. But I think we're going to flip sideways here. I think we're making a high right. I still up my position, I think it was, Monday, Tuesday this week. So I'm actually flat right now. And I don't think there's a huge decline here because the previous highs was a breakout, a confirmed breakout to the upside. It did everything it's supposed to do. So I think we'll pull back, but a pull back, 608, 609 in that vicinity. And I think we'll probably drive a B wave right here. And this B wave may last possibly into, I don't know, September, October. And we really don't go anywhere. We really had a big rally up. We're due for consolidation. We're entering into the weakest quarter of the year. And so I think we just don't do a whole lot for the next several weeks. It's just, can you short? Well, you're going to find support at the previous highs. And so it's not a huge downtrend, but it'll make it. And the sentiment right now is kind of leans a little bit bearish too. So anyhow, upside right now is not much. I do have a target later on after we find the next once this consolidation ends, which I think will be in October sometime. I think the next run up will take us to 740, which is pretty much which is basically what we're doing right now. I'm thinking this is the halfway point of the next move up on a big time frame. So if you do those statistics, you come out around 740. So I think a huge rally is going to start. And normally huge rallies start with a lot of panic. The market doesn't have to really go down to have panic. But I bet for this all over, the 10-day trend, which is how I measure panic, trend readings above 1.2 show panic. If you get a 10-day period, which is basically 2 weeks of panic, I bet that trend gets at least 1.2, if not higher, before the next rally starts. And that's what I'll be looking for right now. The 10-day trend, I think, is coming in around 105. It's fairly neutral. It's not saying a whole lot. But anyhow, that's what I'm expecting. Nothing real bearish here, just a consolidation and an uptrend. Support, it depends how you draw your trend lines. Probably 608 on the SPY, and the next trade is worth catching because it'll be just as big as the April run up from the current high. So it looks promising, but doldrums between now and October.
Can you hold on for another segment?
Sure can.
Great. We'll be back with Tim Ward from the Ward Oracle. This is Basil Chapman sitting in for Tommy O'Brien. The Dow right now is up 251. S&P's up 38, and we're going to get to the 337 time frame, going to 352, which is going to be very important, and we'll discuss it later in the show. I'll be back in a moment. Folks, we're back. We're on with Tim Ward. Tim, what chart would you like to go to next?
Let's take a look at the gold market. It's kind of a repeat, but here's the XAU going back to 1988. So it goes back a while, and all it is just the RSI of the monthly. This is a monthly XAU RSI. Anyhow, so I marked the times with red dotted lines going back to 1988 when the RSI got above 70. We're at 70.97 right now. The June high came in at 71.3, so we're still there. If you notice, market has really had made any headway since, at least on at least on GDX.
Kind of gone sideways all of June and July, yeah.
Yeah, it's just gone, actually since mid-April, it's gone sideways.
Right.
So what's all that mean? We're probably going to pull back down to support. That's all. It's just a consolidation and an uptrend. So the monthly charts rule the weekly charts rule the daily charts, and all the way down. And so if you get a signal on the monthly chart, that's a lot more important than a weekly chart signal. So now we got a monthly chart. I'm not a big bear at all. I'm just saying we're going to consolidate at some point and probably pull back, at least on GDX, around 175. Let's take a look at the next chart. This is the monthly GDX. It's 5112. Here's the April high. It hit, I don't know, looks like about 53. Went a little bit higher in June. Looks like it hit 54 and change. But anyhow, I do a lot of volume studies. Anyhow, what I'm talking about here, 80% above the Bollinger Band. In other words, I tried to sail about 80% above the upper Bollinger Band. So I was a seller up in this 50 or 52 range. I got around, I got out about 50. Then once it did, it backed off lower, but it still closed above the outer Bollinger Band. And normally, the farther you away from the mid Bollinger Band to the outer Bollinger Band is 2 standard deviations. You get past that, the market gets really extended. And so the market really had a decent run up. A lot of stocks, gold stocks, have done well over the last year. And so we need to consolidate a little bit. But anyhow, this April high, in June, we tested the April high. If you notice a big drop in volume, it's about a 30% drop in volume, and you close below the April high. So what that says is if you can't take out the previous high on higher volume, it'll attempt to take out the previous low. Well, the previous low is also the April low, which comes in around the 40 range. So I think that's probably where we're heading. This month, we're not closed yet, but in July, this is a possible bearish engulfing pattern. So if we close here or lower, it'll draw a candlestick pattern called a bearish engulfing. And so that's another kind of a bearish, this is a bearish, I forget what you call it, rising star or something. It's a doji. Dojis at tops are bearish. So now you got to test the previous high and higher volume. You could end up with a bearish engulfing. So what I'm thinking over the next couple 3 months, probably a low in October, because seasonality a lot of times marks highs in gold in the October time frame. So that matches up with the equity market pretty well. So this market could have it'd be about a 20% pullback. So, but this is still in an uptrend. Nothing really to worry about, my opinion, on the longer term. But over the next couple of months, I think you're going to see a pullback. The next chart, this is a bullish percent index. Now, the bullish percent index measures the point and figure buy and sell signals. So, in other words, when I drew this chart, 96.43% of the stocks in the gold miners index were on point and figure buy signals. Well, you'd think that'd be bullish. Well, it's not. It's actually, if it gets up around 95%, I marked those times in the past going back to 2006, and all of them put at least a short-term high in. So I'm thinking this, even though the market's strong externally right now, is actually too strong and needs a rest. So this is another reason why I think you'll get the pullback. I'm currently kind of out of my seniors. I'm still in my juniors quite a bit because the juniors are doing fine. But anyhow, the juniors are playing catch up. Here's another indicator. This is the RSI of the inflation deflation ratio. Kind of the same thing. This is a weekly RSI. Here's the inflation deflation ratio. This thing going on right here. I actually don't do statistics on it. I measure how fast it goes. So I use an RSI on it, and we're up. We hit 60 right at 69. We're at 65 right now. So we're starting to back off a little bit. This is a weekly chart. I think last week we hit 69. Is that close enough? Yeah, in my opinion, because we got other indicators saying we're probably going to pull back. But kind of the same story. I think XAU 75, GDX around 40. But several different indicators suggest that we are going to get at least a pullback here. But this is a pullback on a bigger uptrend.
In a big uptrend, right, yes.
Yeah, it's a lot of these monthly charts are just turning up off the lows. And monthly charts usually don't do whipsaws like dailies, sometimes weekly can. Monthly, you very seldom get a whipsaw. Yeah, once they start turning up, they'll stay up for a long time.
So before we run out of time, I'd like you. Is there something in the chart number 8, the last chart? Because this flat, long, sideways pattern. I'd love to hear what you say. Because the longer you go sideways, sometimes when we break to the upside, that can be quite powerful.
Yeah, I think we actually have broke out to the upside. The market's really gone sideways from 2020 to 2025. So can we have a 3-4 year rally? I was expecting at least we go up to 2027. I can next time around I'll show that chart and the reason why. I don't think that'll actually even be the final highs, because I think there's a good chance this is probably similar to 2020. There's a great big 12-year cycle in the gold market that started in 2020, ran to 2012, where we had a high in 2012. You had 12 to that, you come at 2024. So there's a great big 12-year cycle. So there's a chance that 12-year cycle actually started from the 2024, and you had 12 years to that. But that's kind of, that's a big statement to make, I guess you might say. So I don't want to say that's going to be out the case, but there's a chance that could be the case. But I do think we release rally of 2027. We're still fairly early in the this big run up. Not in the next 2 months, because the next two months I think we're going to consolidate. But this is a big beginning. Here's I do one stock here real quick.
Sure.
This is a DVS. It's Dolly Van Durden Silvers Corporation, and this is the one that really hadn't gone anywhere for the last couple of years, and I think we're breaking out right now. The symbol is DVS.
This is trading at $3.74, folks. Yeah, it does look good.
Yeah, it's similar to KMI and ATRO if you do pattern recognition.
Very good. Well, Tim, thank you so much. Always fabulous information. I'm sure the listeners are already looking forward to your next session, which will be on Tuesday, right?
Yep, next Tuesday. Talk to you then.
Have a great weekend, and thank you for that information. Folks, that was Tim Ord, and he'll be back on Tuesday. Check him out, Ord Oracle. This is Basil Chapman sitting for Tommy O'Brien. I'll be back in a moment.